great future. We're talking real money.
Hi, welcome back to Talking Real Money. I'm Don McDonald along with Tom Cock, and things are working so well this hour, this podcast. I'm just happy to be a part of it. Aren't you?
Let's see how it goes, then I'll think about it.
We're here to talk about, well, money. And money is used in a variety of ways. It takes several forms. You do many important things with it. You know, you live off of it. You earn it to live off of it. But you also, if you're smart, you use it to build future wealth. And one of the more popular ways to build wealth over, most of the last 100 years or so is buying a house, buying a piece of real estate, because they're not making any more of it. I've heard that said.
It only goes up.
It only goes up. Well, does it always go up? Peter Schiff, who's a economist and a pundit on many of the financial programs all
Not
over. Not
my favorite guy, I'll tell you straight up. But okay.
No, he's a predictor. He can be a kind of a bear a lot. He's just
and they say he predicted the 2008 housing crisis. I'd have to go see what he actually said.
I was going to say I think a lot of people did kind of.
Me
they
too.
Warned
by the way,
about
right after the value of my house plunged.
But he said,
that was coming.
He said something really interesting recently on a podcast. He said, quote, we're talking about buying a house, quote, a house depletes your savings. It's a money pit. It's crazy the amount of money that a house costs you. Now, Tom, I have to say to some extent, I kind of agree with him. A house can
my house is a money pit?
Well, I know your house
so far.
Yeah,
has been so far.
My house is a money pit. I mean, I have put into my house in 27 years 1, 2, 3, 4, 5, 6 air conditioning units. 6.
Well, turn down the air conditioner. What are you doing? That's crazy.
Well, because, anyway.
They're on a lot there.
There's a lot of
warm.
I mean, the wood rot, tens of thousands of dollars in wood rot.
How many roofs have you gone through now?
I've gone through I'm on my second roof.
Okay.
My second roof. Plumbing leaks. We've replaced the flooring on the first floor.
One time the floor, I remember that.
We replaced the whole first floor flooring.
So why don't you just go rent an apartment?
That's what I'm thinking. Maybe it makes more sense, doesn't it? We've often made this point that maybe there is a case to be made for renting. Now, of course, the real estate industry hates that. But according to an insurance company survey by Hippo Insurance, which is, I guess, a big fat insurance company, homeowners spend an average of $6,000 per year on property repairs and maintenance. Now,
that sounds like a lot to me, but when I heard the number, but okay, sure.
Are you sure? Because I ran the number and I went, wow, that's less than I spent.
Well, I spent a lot more than that the last year and a half, but I moved into a new place that needed, well, not a new place, a place that needed a lot of work. I'm okay with all of that. And I think, yes, you could make the financial argument, and we have, that probably in many ways from a financial standpoint, it does make more sense to rent than buy. We've gone through that.
I think part of that truly though, depends on where you are. If you're in an area with where real estate in a very vibrant economic area, real estate can be a pretty good investment. But to apply this universally, I think is where the problem lies.
No, I think it's bigger than that.
Okay.
The investment, that's the one I was getting to that. That's the one I really struggle with because people say it's going to be the best investment of your life. Not if you invest in stocks. Stocks have been a far better investment than real estate.
In aggregate.
Schiff is right when he says real estate's made, a little more than inflation over the long haul. You're right. Here in the Northwest, we've done better than that the last quarter century with its bumps along the way.
You've done better than that in the Los Angeles area. You've done better than that in the Bay Area.
Sure.
We've done better than that in Florida.
Yep. But there's a lot of places in between that have.
But I was going to say, are you in Missouri?
Yeah.
You haven't. As a matter of fact, you probably haven't seen any increase over inflation in those areas.
We can continue this because there's a survey number that really disturbs me when it comes to real estate as an investment.
Well, we can't just leave Tom disturbed, so we're going to have to come back and talk about that. 855-935-TALK is our phone number if you have a question for us.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
So is real estate a good investment, or is it just not necessary? It's a specialty thing. In some areas it's going to do well, in others it won't. We're talking about that because Peter Schiff recently said that homeownership is a money pit that destroys your savings. And Tom got a little upset with something. And we need to let him get it off his chest.
Thank you. I really do appreciate that because it's a long weekend. I could stew on this till next Tuesday. So when they ask you all, not you, Don, because you do know this, what is the best investment? Now, that suggests the thing that's going to make you the most money, right?
Yes, we get that a lot, yes. What is the next best thing?
Yeah, that's always true. And 36% of you, almost 4 out of 10.
It's almost 40,
close.
yes.
Thank you, yes, close. Think real estate is the best investment.
Yep.
Well, it has not been the best investment. Not over the long haul, not for the last 25 years when you're thinking, well, it's only gone up in Seattle. And by the way, it didn't only go up because in the early 2000s it went down, the late 2000s went down. There are periods where it looked pretty bleak. So that's not why I would buy a home as an investment. I wouldn't say that's because it's going to make me rich. That's not why. I'd buy it because I want to live there, and I want to buy because I want to be part of the community, and I don't want to just be a renter. Those things, sure, I can agree with those. But not when it comes to, I'm just looking to make money. Then I'm going to be in stocks and equities because that has been the better return over the long haul.
Yeah, and even over the shorter haul, as you said, 25 years. The S&P 500 has returned let's see, about 9.8% is what
basically what it's done over the last 100.
Whereas home prices have grown at between 4 and 6%, depending on where you are.
Is that from Schiller?
That's from Schiller. Yeah.
Yeah. And then, by the way, I don't think that number of home includes all the things you started the conversation about, the roof, the air conditioning, all that stuff. Because in my sale, almost 2 years ago, you know this, after I had thrown in everything that I spent money on, there was very little capital appreciation that I had to pay tax on because it turns out that there had been a lot that had been added along the way. And, of course, as you went to sell the house, there was a considerable expense to making sure everything was up to grade.
Now, it's interesting. Homes are different from real estate in general. The reason we think we make so much money in homes is because of the leverage. We have mortgages, so it looks like a bigger return on our investment, but it's leverage that's done that for us. The FTSE All Equity REIT Index, actually over the last 25 years has delivered about 11%.
There you go.
But that's buying REITs in an index fund.
Whole different topic.
Whole different thing.
Yeah,
so real estate should be a part of your portfolio. Problem is most of our big real estate investments are in the thing we live in, which really hasn't proven to be a very lucrative investment.
And the other part of that is as you get older and you need money, you could be house rich and cash poor, which is a horrible thing to be at when you're in retirement because you need the money to spend.
That's the other downside that we didn't mention is the illiquidity of your house. A REIT index is very liquid. You can sell it immediately. Like that.
Well, except your house was liquid when you had the water spill thing, but otherwise,
Now, have you gotten a call from your daughter yet? But
which daughter? Oh, she will.
Slamming real estate?
She will. If she's listening, you can count on it.
Okay.
And I haven't seen a text come up and no phone call. So
she must be busy. Yeah, that's
She'll
good.
get mad at me.
That's good for you.
You guys are talking about real estate. What do you know about real estate? Well, I've owned some for the last 50 years.
No,
or whatever.
and it's not that we know it. We just know how to look the numbers up.
Can run the numbers, and the
we
numbers
can look
don't
up the
agree with
numbers.
what you all believe. Yeah, that's a problem.
Yeah, because here's the thing. This is a big problem with us as investors pretty much across the board, is we rely way too much on anecdotes.
Yeah. You've always heard it. Hey, real estate's the most
I made a
important
lot of
investment
money
you
in
ever
my
make.
house. Yeah. Sorry, that's your house. That's an anecdote. And I bet if we actually dug down deeper and looked at the return, if you hadn't been leveraged to the hilt, it would have looked a lot worse. And then you got to deduct all those expenses. And we kind of forget about deducting those from our return because they happen
the $6,000 a year.
slowly.
Yeah.
Well, I mean, for example, one of your costs of owning a piece of real estate are the property taxes. Now, you don't deduct that, but that's an expense that could.
I get to deduct those on my federal return.
I know on your federal return, but not from the value of your house.
No.
So you don't say, well, gosh, I paid like $12,000 last year in property taxes.
Yep.
That means my cost of home ownership was this much more. No, we tend to we leave things out conveniently.
I think it's one of those myths that everybody sort of agrees with. Yeah, that's your biggest investment. That's going to be your most return. And it just has not been the case, at least according to the numbers.
At least according to the numbers. And again, with exceptions, with some markets that have done incredibly well. I mean, and we can look back. We've looked back actually 100 years or more.
Sure.
And after inflation, the Case-Shiller number going back over 100 years, and I don't have the exact number in front of me, but it was about 1% per year over inflation.
That's about right. And by the way, you've owned homes for 100 years, so you would know. 90-something years?
Feels like darn close to it, actually.
Working with me, getting older every day.
When you think about it, it feels really close.
Yeah.
8-5
Sign up for retire meet. Should I say that?
No, you can't do that yet.
Okay, I'm sorry. I got to get it sold out, or
that's the end of
big trouble.
That's the end of the year. Now, we're going to take a break here in a minute, so I don't want to go to the caller, but we got a minute to kill. When we get back, we're going to talk about, because we've got someone who wants to talk with us about real estate. So we're going to
about real estate.
So this
we're going to get educated on real estate.
Yeah, I go to it now, but it's like 45 seconds until the music.
No, I want to spend a lot of time on this topic.
So you want me to go to her right now?
No, I just wait until after the break. That's why I went to the retire meet thing, but I knew because we had a couple minutes to talk about it.
It's a him.
It's fine. You want to cut me off and tell me?
It's a him. He spelled it wrong. What?
You don't want me to talk about retire meet?
No, I would love you to retire.
No, apparently not.
I would love you to retire meet. I would love you
me to retire sooner than.
Yeah.
I have. By the way, you're going to be glad to know that I have a lot of
like this year.
I have a lot of retirement jokes, of course, for retire meet. They just don't work anymore.
Oh. Can you retire that joke?
No, that's going to be the first one right out of the gate.
I think
retirement.
I think your retirement joke needs to be retired. We got lots of lines open. The phone number is 855-935-TALK, 855-935-8255. And that music you hear, well, what does that mean? It means it's radio.
Rescue music.
Yeah, it's rescue music. And it also means in radio, there are commercials coming your way. So stick around.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Is it a bad thing if you get a COBRA notice in the mail? Is there a suggestion?
I got a COBRA notice too.
So they're getting ready to tell me something?
We've got new benefits at Appella, and I got this COBRA notice, and I went, have I been relieved of my duties?
I guess so. You think they tell you that ahead of the COBRA notice, but I guess not. So
I have a feeling that even with Irma, it might be better to get on Medicare if I have to go COBRA. I don't know. 855-935-TALK. That is a phone number that brings you to the show to talk about the things that you want to talk about that are money-oriented or to ask us a question. And now, Gene is up from the most fun place in the Pacific Northwest to say Puyallup. I just love saying Puyallup.
And you said it correctly. Good for you.
Hi, Gene.
Not everybody does. Gene, how you doing?
Hi. I'm good. How are you guys today?
Good. Thanks.
My question is kind of following up on what you were just talking about with the real estate. I appreciate you taking the call. So we have our primary home, and a few years ago we bought a rental property that we've been able to keep filled. Refinanced about 5 years ago, and so the rental property is paid off free and clear. And now we're probably after expenses, I don't know, making around $1,500 a month on that property. I'm curious if some of the things you were saying regarding real estate as an investment also applies to this rental property, that maybe selling that thing and just investing in the markets might be a better move than holding on to it.
What is
because you're in business now.
Yeah,
that's
but
a
what's the
thing, completely.
It's different. But what's the value of the property?
It's probably tax assessed around $350,000 right now.
Okay, so you're making now. This is actual.
So if he's taken in 15,
free and clear. This is you've covered all the expenses.
$20,000 a year.
So it's about $18,000 a year. Yeah,
yeah,
$18,000 a year. So
roughly.
You're $350. That's a decent return.
I always forget the tax. What kind of taxes you got to pay on the income from that, though? You got to pay something.
Oh yeah, that's not after taxes.
We're in the 22% bracket. Yeah.
But that's neither here nor there. Like if you had this, let's look at it this way: if you invested this in a portfolio of equities, your expected return probably around 8%.
That's generous. I'd say 7.
7.
Okay.
Let's be conservative and say 7. Your current return right now is right around 5%.
But you don't get, when you just own equities, you don't get to fix toilets, you don't get calls in the middle, and there's all that other fun stuff that goes along with that.
True, I hadn't factored that in.
Yeah, please.
I hadn't factored in the fun factor. That's the fun factor.
You called Puyallup
as
fun,
an investment, because you have to work it. You see, at that $1,500 isn't after your labor. So you have to figure out how many hours a month you put into this thing. And, I wouldn't calculate my labor if I was you at anything less than $50 an hour. So you got to add that in, and suddenly your return starts looking like low single digits.
Yeah, I mean, there's another side of that, I guess, that you could say, yeah, but I'm building, go buy another one. I got another. It's a business where you're growing the business.
If that's what he wants to do.
If you want to do, if that's something that's important to you, sure.
But this is why we say that as an investment, not as a business, that's a different thing. As an investment, real estate's not particularly lucrative. It hasn't been, I should say. Now, we have to add in the appreciation, the expected appreciation, but historically that expected appreciation has barely been inflation. So real returns, you're looking, maybe you're at 6. Maybe you're at 6 when you don't factor in your labor.
Yeah, all the work that goes with that versus putting the money into a stock fund and just letting it ride.
There's no work involved.
Yeah.
And you still have the same kind of uncertainties and dangers. You could go for an extended period without a renter.
True.
So that's a risk of real estate. Real estate values have gone down in the past, just like stocks. That's a risk. So the risks are very similar over the long haul. The return...
Well, lack of liquidity, though, certainly is different in real estate than it would be in a stock fund.
And I didn't even factor in that, lack of liquidity. So you've got an illiquid asset.
Well, excuse me, does the fact, we've done the retirement and I've done it online. And as a matter of fact, we've done some planning with Sean up at Appella. I don't think we've ever asked him this question, though, regarding we're retiring. My wife just retired. I'm retiring. Does that factor into this? Because a lot of the online calculators you go to say, hold on to it.
Nope, because that factors even more because you're retiring and this is still a job. And again, you're not factoring your returns based on what your labor is worth, and it's worth quite a bit.
Tom and Don are talking real money. Reality radio for a really great future. We're talking real money.
You can call us on Saturday. You can do that. You can do that right this very moment if you're listening on Saturday afternoon on Northwest News Radio or on the internet. You can call us now at 855-935-TALK. Or you can go online to talkingrealmoney.com and send in your questions. And Tom collects those by the billions in little tiny tree pieces, bleached white, and piled up in little piles on his desk. Like, I see one right there.
Yeah,
Do you want
there's
to read
several
it?
right here. Sure, you didn't ask me that.
I was getting ready. Well, I thought you would. I thought it was implied in the introduction.
Okay, all right. Could you be a little more explicit in the future?
Wasn't
really
that
appreciate
implied
it, so.
that you collect those little tree pieces to read them to us all?
Yes, I do.
Would you rather I had AI read them? Would that make you happier?
I'd just rather just leave it at that. All right, let's.
I'd rather take a nap.
Yeah. From Mount Airy, North Carolina, Angela, who's written us several times. She says, "Hi, Tom and Don. I heard you say a lot." Oh, thank you. You do that every time too. I heard a lot of 401k plans don't have good options. Who do you recommend that an employer set up a plan with so they can offer the best options? In other words, which companies really suck when it comes to this? And there are some, by the way. They're just abhorrently awful. It's not going to surprise you when we give you the list, by the way. And which ones are good? I can give you a couple of good ones right off the top without even doing the research.
Okay, go for it.
Vanguard has a good 401k plan. Now, I don't know. Here's the problem I don't know. If you're a small employer with just a few people on it, it could get tricky because I'm not sure, how small they'll take or how much they may charge you more if you're a small plan. I don't know the specifics of all that. But what I do know is the funds, the mutual funds, and by the way, I think there's a firm I read last week that's figured out how to use ETFs now in 401ks. The mutual funds in the plan are going to be good. They're going to be indexed. They're going to be diversified. They're going to be low cost. They're going to be the right things that you should put your money into. So that's a good one. Fidelity also has good plans. I think they may be the largest provider or among them of 401k plans.
They're
and
up
they're good.
there, yeah.
They're up there. And you can use their index products, again, generally low cost, generally well diversified. So those are two right there. Right off the top of my head. Now, the ones that are horrible, well, I'll let you do those because you like talking about these companies.
Yeah. Anybody who sells insurance. Just anybody. If they're an insurance company, don't use them. Yeah. Period. Exclamation
Products are lousy.
Point.
Expenses are high.
Yeah, and I don't care what they've changed their name to, which is kind of funny.
Did I just see State Farm is now going to get in the RIA business?
Oh, that doesn't surprise me.
No,
that
not
just
because they figured out where everybody's going over there. I got to join up with that part.
As a matter of fact, I'm trying to remember because now I've forgotten the names. I didn't know this one was coming. So,
no, you didn't. You're supposed to, by the way, and I forgot to send
supposed to be psychic,
so
but it's okay.
Yeah.
But let me just pull up. There was a school district that we've looked at in the past, and so I can pull up some of those names. Oh, I was trying to remember the name. Okay. There was a company that was big on 403Bs, but they also do 401Ks called Valak. That Valak was owned by AIG, but they changed their name cleverly to Corebridge.
It's way better than a pickle company.
It
just
and
sounds
nicer. This one sounds really cool, but Thrivent sounds like a great name. Thrivent? Oh, I'm going to thrive. That's the Lutheran Brotherhood insurance stuff.
The Brotherhood.
Exactly. The Forest guys, they changed their name.
Rebranding. Yeah.
Yeah, they're all rebranding to try to make them sound like big financial firms when in fact they're big financial firms, but they're primarily high-fee insurance companies. The other ones I wouldn't use is Ameriprise, for example. I wouldn't use a Waddell & Reed. I would not use an Invesco Oppenheimer because these are all going to be actively managed or high-fee kinds of products. Schwab is did you mention Schwab?
I did not.
They're a very good because they
products.
And they're inexpensive.
Sure.
So Schwab is a great 401k
Any of those
custodian.
three right there would, but again, the devil's going to be in the details because if you have a very small startup firm, some of these will just say no, I think.
No, I don't think so.
Or they may charge you more. They may charge you more though because you're small. If you work at Boeing, your expenses are lower than if you work at fill in the blank, small company. Even our company probably pays more, and I don't know what I pay.
Well, you don't know.
I couldn't tell you. I don't. Do you know?
Oh,
what
I
you
do.
Pay for
I
a
actually
401k?
looked it up.
No, you don't. How much
did look
in
it up. It was
administrative
like
fees?
$40
a year. A
year.
month?
I think it was
day?
a year.
Okay, I didn't know that. That sounds low too.
I don't know. I think
for the administrative part, but that does not include the asset management. And you and I pick our own funds there, so we're not paying somebody to pick the fund. Again, no, I don't know all the details. Yeah.
Yeah.
So
I
that's
don't,
inexpensive.
Let's see. Vanguard, I want to see.
I think a few years ago, Vanguard decided they weren't going to take smaller plans anymore.
They sold them off to a census.
That's right. A census. Thank you. You're right.
But they do small plans at a census. And by the way, with them, you can do a solo 401k, which is a one-person 401k.
Yeah, you could do that at Schwab as well.
Yeah. So they're super small.
Yeah.
They accept the smallest of the small.
So at the end of the day, Angela, it's the same method of deciding where your money should go, because we don't think it should go to insurance companies because they're in the insurance business first and the investment business second. And their interest when you employ them is in the insurance products because they make a lot more money with that stuff. So they want to move people into annuities. They want to sell you high expense stuff. That's just the nature of their deal.
Yeah,
so
and
I prefer you not do that.
I'm on Schwab. They say that they will set up a 401k plan for your business regardless of size.
Okay.
Even under 10 employees can have a Schwab 401k. Schwab is one of those companies that really has done a great job of making itself accessible to the greater investor community. And that's why I think that's one of the reasons why we like them so much. They are very accessible. 855-935-TALK.
Tom and Don are talking real money. Your guides to a really great financial future. Tom and Don are talking real money.
Well, we have two choices. We can get you to call right now, which we have no control over, or we can just have Tom read another question. And that's the simplest course of action, I think, at this point. And
let's just wait, see if anybody calls.
All right.
Okay.
We'll just sit here.
You do the Jeopardy music or something, or?
Let's see. Do I have any music? Hold on.
You've got music there.
I don't know.
No? Okay. Then I'll read it.
Oh, wait, I do. No, wait, hold on.
Okay.
Hold on. I think I do. Let's see if this works. Oh, no, that's applause.
We're not getting a lot of that these days. So.
Wait, let's see if this one works.
Yeah.
Hold on. No, it's not working. Is that going to work?
No. Oh.
We're waiting.
In a world where one man stands beyond.
Nick in Gig Harbor. Welcome to Talking Real Money. It worked. Hi, Nick.
The music.
My wife worked at Boeing retired out of there, and she left the money, and I think it was in First Fidelity, and it was in a safe fund, and it didn't do real well. And I know a safe fund, but what do you think of First Fidelity as someone to manage your money?
Oh, boy.
I believe they're one of the kind of people that I just mentioned, but First Fidelity.
It just has that insurance ring to it.
It's not Fidelity. Yeah. We like Thrivent. Fidelity.
Yeah.
Is it First Fidelity Bank?
Yeah. It's one Boeing uses to work on their stuff.
Oh, it's Boeing Employee Credit Union, or Boeing.
401k.
You mean
Boeing the company? I thought they were at State Street, and then they.
Huh. Yeah, because I'm trying. There's a First Fidelity Bank. Boeing uses Fidelity. I mean, the company Fidelity.
The company. We're good with them. If she left it behind and it's still in Fidelity funds. Now, here's the challenge, Nick, because what you said was she left it in a safe fund and it didn't do much. Well,
that's what
you shouldn't expect safe funds to do. They don't do much. They're safe. They're not taking advantage of the stock growth.
Do you have any details? Do you have any details on? Remember any of the names of the funds that she's invested in?
I'm betting it's stable value, but that's just my bet.
It's stable. It is a stable value fund.
Okay, they're boring. Stable value is just boring. But that's what it's supposed to be.
3 or 4%. Yeah. Yep, but that's what it's designed to sort of keep you up with inflation.
It won't go down if the stock market crashes.
Yeah, that's true. But it was even less than that percentage wise. But so we were looking. She needs to go put it someplace where my wife's very, very conservative.
Yeah,
she's 70 years old.
Yeah,
and she just hit me. And
No hitting.
And I'm
It's Valentine's Day. Take the day off from that or something.
I figure my wife will hit me before the day's out too. So
I can count on
bound
it.
to happen.
I think.
It's bound to happen.
Okay, but going
she
going
may
back,
just want to leave it there.
No, just okay. You're jumping ahead. Here's the thing.
Back.
Yeah, because he's old too, very conservative. Yeah. The thing is, Nick and unnamed wife, that music is very loud. Oh, God. The thing is, you should, and you may have heard this from us before, if you have a retirement income plan that says, here's how much we need to make on our money over the long haul to supply the income we're going to need after we're retired, and it's only 3 or 4%, then it's okay to be in the stable value fund. But if you run it and it says, no, we need to make 5 or 6%, some of the money should be exposed to things that have gone up more than a stable value fund. Don's right. The idea there is it has nothing, it's not connected to stocks, for example, or even for that matter to bonds, because I think it's an insurance product. But you need to know that number. I can tell you what my number is. Don knows his number. You need to know that number, the two of you, because then once you've established that, then either A, yes, it just stays there in the very safe, stable value fund, and you don't care that it doesn't grow. That doesn't matter. Or conversely, as you said, Nick, you move the money somewhere else. It has some stock. It's not, you don't have to run right out and buy, put it all in NVIDIA or Bitcoin or something like that. But a little bit of risk that gives you the opportunity for some growth. But that's something you establish through the planning part of all this. Then the investments are made. You were saying, Don.
No, I'm done. You said it all. You said everything there.
Done?
You said everything that needs to be said.
Okay, then I'd like to ask you a question too. I'm at the same age as she is, and
old like us. Yeah. Okay.
Homes. I have zero stocks because I never was very bright. But anyway, I have 4 homes, and they're paid off. But I really don't want to be a landlord forever. And
okay.
I was wondering
Hold at that thought, because we got a couple minutes after the break where we can.
No more hitting either.
Don't hit during the break. And we'll come right back and get to the rest of your landlord question. Don't go away.
Tom and Don are talking real money. For your real life and real future, Tom and Don are talking real money.
Well, we've established that Nick's wife has a great right hook. And now...
Uppercut, too. And an uppercut, too.
I don't know how much pummeling has gone on during the break, but we're going to relieve him of that and talk about the pummeling he gets as a landlord. So you want to get out of the landlording business there, Nick?
Yeah, I've been in it for I don't know, maybe 40 years, somewhere in that neighborhood. But yeah, I want to try to, what's the best way to sell something and invest into the market, I guess. Or safe, whatever.
Well, the tricky part is selling. That's getting rid of them. You got to sell them, and that in itself is a job. But
it is a job. But also, is there somewhere I can take money when I do sell them? Is there a place you can put them in a fund and pay less in tax?
No.
Or you got to pay that closing. Oh, it's going to be the same no matter what.
Yeah, the only way to do it is through a tax deferred exchange.
Yeah, and we don't recommend that if you don't want to be in the business.
That keeps you managing real estate. It just means you're moving from one real estate thing to another. No, it's time to say, guess what?
1031.
Yeah, 1031. It's time to say, I made a decent return.
Yep.
I'm willing to pay the piper, just like we all do with our paychecks and our capital gains on our stocks or whatever it is. You pay the taxes. You don't try to play a tax game. You then determine what you want this money to do for you going forward, what it needs to do for you going forward, and how much risk you're comfortable taking with that money. Those are very important factors, and that's why we really do, when you get to you guys' age, and I know your wife's not as old as you said she was.
No way.
No way.
Not buying it for a minute.
Much younger than that.
Goes without saying.
This is when people start to need a real fiduciary advisor to help guide them through this process. If for nothing else, for a plan,
or just to stand between the two of them, so there's no more beatings going on.
And a great financial advisor can be a really good counselor too. Marriage counselor, financial counselor.
You guys are in the wrong business. You should be
Of course we
counseling.
are. We've always been in the wrong business. What are we doing in money? We don't know anything about this stuff.
Exactly.
Thank you,
We
Nick.
wish you both well. Yeah, thank you.
Have a great Valentine's Day, pummeling
Yeah.
each other.
Sounds fun.
Maybe that's why pink or red are the colors of Valentine's Day. Just
I'd never thought of that before.
From the hitting.
Exactly. So
You hit them lightly, it's pink. You hit them really hard, it's red.
Mm-hmm.
I am not encouraging any kind of abuse. It's a joke, okay?
that'll come next. Don't
I know.
worry.
Just stop it. Now, Tom is going to regale you with a 2-minute retire meat commercial because he's starting to look bad. Go ahead, Tom.
I'm looking real bad because this thing should be sold out. It's been sold out every year. We've done this now I think we figured out 15 of these, right? Something like that.
It's
It's
lot.
somewhere in that area. Everyone sells out. This is 3 weeks from today.
Except
if you're
this year
listening
so
to us
far.
live so far. So we still have tickets available. And here's the best part. The event is a great event. We'd love to have you join us. It's not just the two of us. Christine Benz is going to be there from Morningstar. That's right. We're going to be talking about Medicare, estate
That's right.
planning.
And somebody's going,
That's right. That's right.
Who's Christine Benz?
She's type her name in on the interweb. She's pretty big. So she's an author. She writes all the time about the retirement issues. Joe Saul Seahigh. He was a top rated speaker last year. He's coming back. Paul Merriman, always
Wait a minute. Isn't his
highly
name Joe
rated.
Seal So High?
Seahawks. So here's the thing. You go to RetireMeet. That's MEET.com and you sign up. And you sign up now. Because
because
if
Tom
I get
said
back in the
so.
office on Tuesday and we're not basically sold out, then I'm going to get that Cobra sheet and I have to start using it.
He's
so
holding
let's
all
not
of you
do that.
personally responsible.
Exactly.
It's not sold
Get
out.
on the internet now.
Tuesday. Yeah,
Go
by
to
the way, Monday's a
RetireMeet.
holiday, so you got an extra day to sign up.
Exactly. What else are you going to do, huh? Quit
because
messing around.
Normal weekend, you'd be suffering the wrath of Tom on Monday, which is it was truly one of the worst of the Star Trek movies, The Wrath of Tom.
The Wrath of Tom.
Yeah.
So please, okay, I'll put it another way. I really appreciate if you sign up because I'm getting grief from basically all quarters now. So join us. It's going to be a fun day. If nothing else, the food is great.
And
It always is.
Before I make you stop talking in 10 seconds,
Please.
where do they
Yes,
go to
do.
sign up?
RetireMeet.com. That's retiremeet.com.
Look at that.
Is that
He
better?
came in a few seconds short. We're out
Finally.
now.
The opinions and views expressed in this podcast were current on the date recorded. Opinions, estimates, forecasts, and statements of financial market trends that are based on current market conditions constitute our judgment and are subject to change without notice, including any forward-looking estimates or statements which are based on certain expectations and assumptions.
Although information and opinions given have been obtained from or based on sources believed to be reliable, no warranty or representation is made as to their correctness, completeness, or accuracy.
Information presented on the podcast is not personalized investment advice from Appella Wealth. The views and strategies described may not be suitable for everyone. This podcast does not identify all the risks, direct or indirect, or other considerations which might be material to you when entering any financial transaction. Past performance does not guarantee future results, and profitable results cannot be guaranteed. We hope you realize that the information provided on Talking Real Money is for informational, educational, and hopefully enjoyable purposes only. The podcast is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Appella Wealth, a fee-only registered investment advisor.
Please see Appella Wealth's ADV Part 2A on our website for information regarding Appella's fees and services.
Appella Capital, LLC, DBA Appella Wealth, is an investment advisory firm registered with the Securities and Exchange Commission. The firm only transacts business in the states where it is properly registered or excluded or exempt from registration requirements. Registration with the SEC or any state securities authority does not imply a certain level of skill or training. Appella does not provide tax or legal advice, and nothing either stated or implied here should be inferred as providing such advice. Thanks for listening, and please visit TalkingRealMoney.com for more information and important disclosure related to performance of any specific index or fund quoted in this podcast. I think I need a nap.